So it's been a couple months, Collin. It's great to have you back again. I'm excited to talk about gold, silver, Bitcoin, everything. I mean, there's a lot on the table right now as we head into this slow summer months. Doesn't look like it's going to be so slow, does it?
No, I thought it'd be slower, but we've been seeing a breakout in all the alternative investments. There's some historic bills that have passed, and then I think with the tariffs starting to hit in a week or two here, there's some pivoting here of investors moving into different assets. Silver's broke out. Obviously, it hit broke through that resistance level of 34, 35, and we're sitting almost at 40 today. So a number of really interesting things happening. So excited to be on here. Thank you.
Yeah, this is going to be fun. I mean, it really is. Let's, you know what? I always like to start sometimes with the bottom line, what I refer to as the bottom line. 3 quick questions, and they're all 3, I think, in your wheelhouse here. You already mentioned silver, where it is right now. Gold's breaking out. Year end, 12/31. We're celebrating New Year's Eve. Where do gold, silver, and Bitcoin lie? You can say percentages, or you can give me actual numbers where you think. What's your number right now?
I think Bitcoin, very realistically, in the $150,000 range. Gold, I think, is in the 3,600, 3,580 range based on the targets I'm looking. And then I would guess that silver's I think it's going to hit 50 this year, but then I think it pulls back a little bit after it hits 50, maybe kind of drops to I want to say 45, 46 range. Maybe there's a little bit of a sell-off in December. So I would say those are my predictions for those 3.
Well, silver, clearly the more tradable. I put the quotes around that here. Very, very active. I mean, when you look at I hate calling it volatility, but I always say that volatility is a trader and an investor's best friend.
Yeah.
The trend, it is the noise in the trend, and you always want to look at the trend. But silver is definitely the one that leads here in terms of volatility, and as you've pointed out, returns right now. Let's kind of back it up right now, and we're going to get into trading both of those, but let's back it up and talk about what's going on. You mentioned, we've got some things that have been going through the Genius Act, just recently passed last week, and it obviously has an effect on crypto here. I don't want to bundle everything up at once. I kind of want to take them one at a time. Let's start with that since I brought it up. What is somebody who, watches very closely the effects of, this type of bill that's coming or has passed? How does that affect mainstream Bitcoin and / crypto investors?
Well, yeah, the Genius Act is similar to the Big Beautiful Bill is a name that was, to gain a lot of attention, but it doesn't do anything unique. And it's actually the most simple thing that they're trying to do. So it's funny. It's a funny name, but basically what they're doing is they're creating regulation around stable coins. They want stable coins to actually be backed. They're requiring them to be backed by U.S. Treasuries or the dollar. They don't want you to back it with anything that's volatile. And they think that will bring more stability to the market. A digital coin backed by fiat, and they just want to make sure that they follow the rules. That's the Genius Act in a nutshell. I could give you a million reasons why it's not good for us. In general, stable coins are not, but that's what the bill is. And I think the thing that I think about, they're going to do audits to make sure that there's dollars in there. First thing, the Trump administration wants this because they want more of these stable coins buying treasuries because we need more buyers of treasuries. That's the first thing. And that might be the actual reason this whole thing passed more than anything else, like protecting investors and all this stuff. I don't know if anybody is really protecting investors. I think the idea is they want more of this 1-to-1 ratio. They want it in treasuries because, as we've seen over the last 2 to 3 months, when treasuries come due, there's not the same amount of buyers. Right.
The bid has dried up a little bit, as they say.
Correct. So I think that's the important part of this as an investor, is that they really are just trying to get people to buy more treasury bonds, U.S. treasury bonds. So forcing them to keep those on the books does that. So instead of the Fed having to buy treasury bonds that nobody wants, then you have these stable coins. And this trend has been coming around for a long time that no one's buying our treasury bonds and the buyers have changed. In 2008, almost half of our bonds were bought by central banks. Today, the percentages have dwindled pretty considerably. Most central banks are getting away from buying our treasury. They don't like our debt. They think we're bloated, which we are. And so the buyers of our treasury bonds today are more individual buyers. They're more retail buyers. And the retail buyers are more looking for better returns. It's not like a central bank. So I think this bill is really set up to make it seem like a stable coin is a good thing, that it's safe, but also underlying under the hood, it's really just creating a situation where we're buying more treasury bonds, which as a country we need to do.
Right.
But if you look at the dollar this year, the dollar's down 12% relative to other fiat currencies. So if buying a stable coin is backed by the dollar, you're buying a paper digital currency that has lost 12% this year alone.
Oh, what a tangled web we weave, right? It's interesting because you bring up, the bid for treasuries, and if you look, we're 2 days past that bill going through, right? And there's been a 2% move in the 20-year bond, which is, for those that aren't aware, I mean, we're in a bear market in terms of the U.S. bonds.
Correct.
And that is typically something that is not a good optic. But in the last 2 days, we've seen a 2% rally. But you've also seen the dollar start to make a deeper dive again and head back towards the lows that we've seen in 2025. So this really is following exactly what you laid out. We're expecting to sell more bonds, or there to be some demand for bonds because of the stable coins. But at the same time, does a stable coin, does that also deteriorate the dollar? I mean, are you really just chasing your tail with this?
Yeah, I mean, the idea behind stablecoins, in my opinion, are they created it because they didn't want people that were traders when they moved out of crypto to go into cash. Mm-hmm. They wanted them to go into another thing that they made money on, right?
Right.
If you're an exchange or you're any of these groups that makes money on stable coins, you prefer that they go from Bitcoin to a stable coin as opposed to Bitcoin to cash. Also, it gives you a little bit more control. I mean, stable coins are really a function of the government wanting to know more about where your money is. They hate the idea that you could go into cash and then move it, or they can move the Bitcoin into another country and they can't tax it. They want you in vehicles that they can control. And so that's why they want you in this digital currency. And even though President Trump has said that they're not going to issue a CBDC, stablecoins are sort of a function of that. They're not directly from the government, but in a way they are, because the government has access to the data. So I think it's, another way to corral the crypto market, which the crypto market hates. They want decentralization. Stablecoins are centralization in theory. Right. So it goes against everything in crypto, the big philosophies of crypto, that it should be decentralized and no one should have control, and it helps the bond market. And it's sneaky, calling it the Genius Act. But I think anyone that's a genius would never buy stable coins.
Well, let's flip. I mean, when we look at Bitcoin, let's turn this into something where we focus it into your where you're seeing Bitcoin go as we make our way towards the end of the year. And first of all, I got an interesting question. It used to be a year ago that Bitcoin seemed like it was a risk-on, risk-off asset. Investors were buying Bitcoin based on speculation and speculation only. That has changed here over the last 6 months to 12 months or so, and it seems to be more of a store of value. And if I look at Bitcoin right now, you're up around 120,000, and that's after bouncing around, but it's maintained its trend, unlike gold. And I think I asked you this last time, if you buy gold or Bitcoin as a hedge against the dollar. And right now, the vote of confidence sides on Bitcoin. Is that the case?
I think it's still, in my opinion, it still has a significant amount of risk in that. And this is the thing that I always say, as much as I hold Bitcoin and I have an exchange, if the market decided to sell it for whatever reason they started to sell it, it's still a small market relative to the other markets, right?
Right.
It's still small relative to the bond and the real estate and the stock market. It's still relatively small. And, all of those other markets would survive if Bitcoin went down.
Mhm.
Bitcoin's not at a point now where it going down would crush those other markets. It wouldn't actually. And maybe you could argue that those other markets would benefit from Bitcoin going down. I think that it's still an asset that's acquired by institutions. It's still an asset that, because we become such a world economy that has this exciting appeal, and I still think that the $150,000 target is realistic. But I do think there's a point where there will be a consolidation in the crypto market. Um, will that consolidation end up in Bitcoin or Ethereum or Ripple or one of the other ones? Time will only tell. But there's still so much buying power behind it. There's so many funds that are acquiring it.
Right.
We're still in a good place with crypto. I think it needs to prove that it can be used consistently as a currency and make sense. El Salvador did great, but they're still struggling with it as a currency, right? It's not
Right.
working for them effectively as a currency. Even though the dollar's not great, it functions as a currency. And until they figure out that, dynamic behind it, they'll still have significant risk
All right,
in
let's stay at
Bitcoin.
10,000 feet for a second here. And you brought up the dollar. And yeah, whenever I hear the dollar, and we've already talked about the dollar heading back towards its 2025 lows, and this kind of entwines itself with the gold conversation as well. The U.S. dollar as a reserve currency, and there are a number of arguments out there that it'll never end. We know that history tells us that it does. There's a cycle. There's a definite cycle, and Ray Dalio does a great job in his book of actually laying that cycle out and detailing exactly what happens. And we're at the tail end of that. We're definitely over the top of the curve there. But do you think that is turning into an issue with the dollar losing its ground? You've got, central banks all around the world increasing how much gold they've bought over the last 2 or 3 years. We've already talked about our bond market, the demand for our bonds going down. Are we sliding down that slippery slope right now? And the follow up to that is going to be, does that build a stronger case for gold, silver, and Bitcoin?
In a way, our government has given up on the idea of paying down our debt at any point. I think we're trying to spend our way out. I mean, the new tax bill does that. It just adds, over $4 trillion in debt. We're at a point where, our interest payments on our debt are about, 1.5, 1.6 trillion a year. So I think what it comes down to is it's all about assets that you own by yourself. Every asset that you can own that has a limited supply, that's in use, that people need. Copper has skyrocketed. Silver, platinum's up 50% this year. These are all things that they have to have them in society. They won't.
Right.
Silver's had a 5-year shortage of silver in industry. It's, these are things that have to happen. So I think what will happen is a lot of the things that people are buying day to day that are leveraged, that people can't back up with consistent capital, will continue to lose value. And we've seen this more than ever, that the asset economy is the thing that's driving wealth today. Because even over the last 4 or 5 years, as average Americans were able to buy significantly less, the wealthy has been able to buy significantly more because they have assets. They're buying true assets. There's so much noise, Chris, about these ways to make money, these get rich quick schemes. And social media has perpetuated this
Oh yeah.
more than anything. I mean, these businesses they tell you to buy, these courses they tell you to buy, they're all hogwash. I've never seen more BS in my whole life. As someone that I own five businesses. I'm a partner in a few other ones. I look at P&Ls all day.
Sure.
Businesses take 3 to 5 years. These courses perpetuate that you can make, hundreds of thousands in year 1, year 2, year 3. People need to go back to the basics. Yeah, I saw this great video of they were talking about American Idol and then The Voice, and then there was all these shows before those. They're all the same. Like business is the main big businesses are all variations of the same thing that have been around for a long time. My gold business is I worked for another guy that had a gold business, and there was other gold companies, and I realized that there was more opportunity there to do it better. So I think there's a lot of money getting sucked out from people today because they're so desperate to find a way to grow. And it's just sometimes it's just the simple things. Like there's gig economy jobs that are valuable that people need, that you can actually get real money tomorrow. And that's a much better way than some pie in the sky business course that some guy that's making millions of dollars that probably never even ran a business
Right.
are doing. So I think that's the noise that's the thing that I see the most is the get rich quick is bigger than it's ever been, in my opinion. And I think that's the biggest problem with today's
Get
society.
rich slow is what you slow and consistently. It's funny.
Slow.
I'm the same. I own it's 4 different businesses now. One of them is a soup company.
Oh,
It's
wow.
not sexy. Yeah, it's not sexy. It's not, it is something that, like you, I kind of saw someone doing something similar and said, hey, I can do this a little bit better.
Right.
And you talk to, you talk to your attorney, you talk to potential partners and clients and business, et cetera, et cetera. And it took 4 years to get it rolling. But now that it's going, it's something that has turned into hey, this is a revenue generator for me. And you move
Yeah.
on.
And people would always need it. And
Right.
you asked, took you 40 years. That's a great example. Like you did all the research.
Right.
And I think that's the thing that I found. That's the thing that I found in the gold business is that, even now, like a lot of times people they call the first company and they buy from them. And that's the biggest mistake. And actually we tell people in our emails, call around, check out our reviews. We know we're a good company. You're going to like what you see, but call around because people are just lazy when it comes to doing the research.
They are.
And they need to spend more time vetting these things out. And if they do, I want to run an ad, but my attorney says I can't, is that because a lot of our competitors charge outrageous fees. And I want to run an ad saying that we've saved people billions of dollars. Because if you do the math of how
Right.
much we've sold relative to what other competitors charge, it's billions of dollars in savings. And they said that we can't. And really, if they just took 1 or 2 more calls, they would figure it out. That, a lot of this stuff that they're selling, these free coins and all this, it's hogwash. It doesn't help you in any way.
So the stuff I'm seeing on TV late at night is not the way to go.
Yeah, exactly. And you got to think if they can spend, that much on advertising and they're offering you, there's like big thing in the industry, $10,000 in free gold and silver and all this stuff. They can give you, if they can say it's free for that amount, like, what are you paying? Right? What are you paying for?
Right.
And so, yeah, I think we've saved people billions of dollars in
Let
purchases.
me back you up for a second, because you said something that stuck in my head, and I put a pin in it. When you said hard assets, and when you're talking about building wealth, what's the difference between a hard asset and the way that 99.7% of the people are doing it, or whatever the percentage of people? What's that difference? I know what the answer is.
Yeah,
but
well,
explain it to people
There's
who are
the majority of the wealth for people in this country is in their home, which is not an investment,
right,
and then in their 401k, which they are getting charged outrageous fees in. A lot of times they're not even getting access to the right ETFs. The mutual fund companies and the 401ks are all colluding together And so your 401k has a fee of, 1 to 2%, plus the funds they put in there could have a fee between 1 and 3%. So you could be paying 3 to 4% in fees on your 401k money. So, and people think, okay, I got a home and I got this 401k that's got 100,000 in it, but it's never going to grow at the pace of the stock market. It's not going to grow because of the fees that are accrued. You're going to lose too much. And so I think that the idea of owning something by yourself in today's world is really scary, but that's really the way to go. The reason that your grandfather, I'm just throwing this out, used to save silver coins and used to save old things and they'd give it to you is because your grandfather knew that those things had a limited supply and they had value. And if I just hang on to them for a long time, when I give it to my grandkids, they'll be worth. And that's actually how I found out about the gold and silver business. Is my grandfather gave me silver coin. And he showed me, junk silver, pre-1964 silver quarters. And he's like, look at this. What does it say in there? It says 25 cents. And he's like, yeah, but it's worth $1. And I was like, what do you mean it's worth $1? He's like, well, there's silver in here. And the silver is worth more than the face value on the coin. And I was like, well, how can that be? And so he explained that story behind it. So our grandparents knew that you had to get assets outside of your home and outside of the 401k system wasn't even around when our grandparents were saving money. So they knew to get other assets. So they'd buy other things that have a limited supply. That's the key to today's wealth, is finding an income stream to get some money coming in and acquire assets, whether it's driving Uber or creating something or selling something or just creating. I have guys that work for me. I have this one guy who, this really smart guy, he's very wealthy, makes great money with me. And he still on the weekend does garage sales.
Okay.
And he finds stuff for 50 cents and he puts it on eBay and sells it for $5. And I was talking to him about it. And he's like, I still make, he's like, I probably still make 25,000 a year net. Why would I stop? And $25,000 is a lot if you put it into the right things. If you buy gold and silver, if you bought platinum last year, you're up 50% on that 20 grand, right? I mean, so you have to find other ways to make money. And all the studies are showing this, that one job today is not going to get it done. You have to have other income streams. And then those income streams go to investments. And that's the key to wealth today.
Yeah. It's ironic. You mentioned the two biggest assets, the IRA or the 401k, and somebody's house. Not many people even own their house anymore because
true.
They've just leveraged that.
Or they're trying to sell it right now. There's more homes for sale now than in the history of the United States, I think.
Yeah, I mean, I think you're asking the numbers nerd. That's a law of large numbers type of situation, I think.
So percentage wise, it's not. Yeah, that's not the case.
Percentage wise, we're still. It's interesting. I just contacted my realtor yesterday about kind of downsizing and said, hey, when's the market going to kick back in again? And she said, first couple interest rate cuts. And the market's going to get flooded with buyers. Everybody's been sitting around, both the buyers and the sellers, because the sellers don't want to sell right now. Because I'm in a 1.7% mortgage right now. Why do I want to think about a 6 or 7% mortgage, even after I've closed the deal on this and put some money in my pocket? It's insane. So you've got a kind of a showdown right now. But yeah, there are still people out there, and the people who own them are taking out second mortgages. And this is a lesson that we still haven't learned. They leverage that asset and they don't end up owning it, which is the important step that you're talking about doing. Let's go a little bit into gold. And I kind of want to take you down two paths, maybe even a third with Bitcoin. But gold right now has been trading in a range, a very tight range for the last 3 months. If you look at it, 32 and 3,400, I think, is where we've been bouncing between. And with all the rhetoric with the Fed, and last time we saw a big move from gold was back in mid-April to late April, when all of a sudden Jerome Powell's job seemed like it was on the line. And everybody freaked out a little bit and said, okay, we're going to start buying gold. It popped us up to 3,400, and we've been going sideways. You're now starting to see it break out. Is this an opportunity? If the average person who's heard about buying gold has sat around for the last let's call it 4 years or 5 years, and said, yeah, I really want to see it pull back substantially before I buy gold. Is that gone? That opportunity? Is this it as you're seeing gold start to gear up and ramp up for another move higher?
Yeah.
Is the
I think good assets that are valuable are
Mhm.
usually not inexpensive. Right. I
Good
think
point.
that's the thing that there's very few times in your life as an investor that you're like, you hit it right on the head. You buy it at the perfect time when the market pulled back. You don't, I mean, you're someone that does this. Like, how often have you hit it perfect? Right.
Yeah,
It's, yeah.
yeah,
So I think you have to think about, is gold an asset that makes sense for the next 3 to 5 years? Do you think it will be an asset that will want to be acquired? Do you think it's an asset that makes sense in the new world, the way that the debt is?
right.
Um, and do you believe that central banks will continue to buy it? I think those are the things more than the price, because I think what it's proven is that everybody was wrong about the price, because it stayed, I remember when it was sitting at 2000, 2100 for a while, and, the writing was kind of on the wall. There was a lot of demand, but it just hadn't really jumped yet in terms of price. And so I think in the time that I've been doing this is that I think the good thing about the gold market is that it's become more of a stair step opportunity. There
Mhm.
always is pullback opportunities. There's always chances there, but I think most smart buyers, like a Ray Dalio, like he's just always a buyer
Right.
because he knows that the everything else is devaluing. And if you look at the charts of like what the dollar is worth 5 years ago to today, then it makes it easier to buy gold because you're like, oh, 5 years ago, $100 bought me this, and now it buys me so much less. So if you just think about what gold can buy for you in 5 or 10 or 15 years, it should work because gold was sitting in the, $20 range like 100 years ago.
Mhm.
And what could it buy 100 years ago? You could pay your rent. You could go to dinner. You could 100 years ago, maybe not your rent, but you could go to dinner. You could put groceries. Like 100 years ago, $20 in gold in money had tremendous value. 1 ounce today is $3,400. It could pay a lot of people's mortgage. So over 100 years, it's been able to hold the buying power. And so that's how I would look at it, is from a buying power point of view. If the trend continues, then gold should be able to hold its buying power of what you need to live day to
So
day.
that's the moment that I bet most of the people that watch this are going to go, aha. Because you're not talking about investing to make a return. You're
Mm-hmm.
talking about investing to keep your value, your wealth, your
Right.
put a name on. Most people think of an investment as I think in two different ways. One of them is, will it beat the S&P 500? And then the second is, will it lose money, depending
Right.
upon whether they're speculating or not.
Right.
You're throwing both of those out and saying, forget about both of those. I'm worried about you being able to use your 401k or your IRA and maintain, uh, call it a lifestyle, call it buying power, call it whatever, your wealth, maintain that into perpetuity.
And I think that's the whole idea. And that's why the idea of like when people would argue that it doesn't pay a dividend or it doesn't do any of those things, I would always say it's not supposed to, number one. And number two, the dividend theory has proven to be pretty faulty over the last few years.
Yeah.
It hasn't held water the way that it used to, because a dividend on a safe asset is going to pay you 3 to 5%, and gold has significantly outpaced that number. Um, And also, when a dividend asset, you still have the risk of the asset losing value too.
I was about to point that exact same thing out. I used to call them losing money safely with a dividend to our
Right,
clients.
exactly. Yeah.
They would say, hey, I need to buy this dividend stock, and I don't care which one it is. Call it AT&T, Verizon, which are great dividend, 5-6%. But when AT&T hits that moment, or Verizon hits that moment, or anybody, Philip Morris,
Right.
Altria, all of them, when they hit that moment where they lose 20% of their value in 1 year,
Right.
you're still getting the dividend, and the yield certainly went up. But at the same time, you're losing money in terms of your capital, and that
Yeah.
was
And
losing money
my
safely.
my thing on those is that I will only buy those if I would see it, if I could project also a 10 to 12% growth in the company too.
Correct.
Because
Right.
if I can't project it, then eventually that stock will lose value. And then what is my 3 or 4% really worth to me? If I project over the next 20 years that this is going to go up, let's just say 10% a year, then when it dips, I buy more and I'm in a great place. But if I
Right.
believe this company has a shelf life, and most of the companies that have lost significant, they're not trending 10% growth per year. So, I think gold is that safety asset. And I think there's just so many interesting things happening. For instance, the state of Texas now has this way that you can deposit, you buy gold from them, they hold it, and they give you a debit card. And then you can charge, basically based on the gold. And as much as I don't love any state or anyone holding my gold, it's an interesting idea in that it's basically like a gold savings account, right?
Mm-hmm.
And it works, and it's going to continue to work. The fees aren't great. There's some downsides to it not being able to hold it. I know they say that you can ship it to you, but this is from a state, like think about where we've gone, where states now, and most states now are opening up the floodgates on gold. They want to take they'll let you pay your tax in gold, right? I mean, think about that. Think about state of Utah passed a law 4 years ago. They're like, pay your fines in gold. How much money has the state of Utah made by creating that law over the last 4 years? So the states are saying the dollar's not good. Let's get another form of currency. Let's get another form of payment to keep ourselves profitable and solve it too. Because they've seen the writing on the wall. They don't want to hold dollars. They want to hold an asset that's going to go up in value. So there's just a lot of these things happening around the world that lead me to believe that it's just an asset that you just gotta have. It's whether it's priced today, and I think what most people do is they buy it when they have finally understand gold, and then they'll just every year or two add a little more, and then if it pulls back, I remember a lot of clients that had bought from me before that in 2020 when gold hit 1,400, they bought. They bought a lot of gold for me. They loved it. They were like, this is amazing. I've been buying gold at 1,800, 1,900. So they dumped a bunch into gold. They bought some silver. So I think it's just an accumulation game for gold. But I think once you have it, you realize that it is a staple part of your portfolio. And I'm not saying you shouldn't have other things, because I do too.
Sure.
But ultimately, the gold is the safe play in your portfolio. When everything else is going haywire, the markets are going crazy, that's when you want to have some gold in your portfolio.
And it's better to own physical gold, the hard asset, versus an ETF or something.
Absolutely. There's no reason not to own the real thing. Yeah, it's less expensive. When you really look at it, if you're going to hold gold for a long time, the fact that you can just store it for nothing. You just got to buy a big safe, which you probably already have a safe. There's no fees. Whereas if you have an ETF or a mutual fund, or you're paying fees. For IRAs, we do IRAs with gold. We have a flat negotiated rate. It's for the storage. It's $150 a year. Doesn't matter how much gold. You get $10 million in gold. I mean, that's nothing. So, there's ways to do it that are and if you really do the cost analysis of gold compared to other assets in an IRA, it's much less expensive year over year, because you're not getting these fees, these trading fees every time. You just buy it and sock it away. You don't, it's not like real estate where you get property tax. I mean, dollar for dollar, gold is a good part. It should be a part of everybody's portfolio.
Love that. And physical gold, again, you mentioned IRAs. That is a situation, obviously, I can't buy it in an IRA and just put it in my safe. You take that physical, you hold that, you're
So
custodian of that,
yeah, so
correct?
we store it in a third party. We have a
Hmm.
location in Texas. It's segregated storage. There's
Okay.
different ways companies store. We only do segregated. We don't do commingled storage
Okay.
because commingled storage, in my opinion, is not safe. So we do segregated storage. So your gold goes there, it gets verified. We take a picture of it. We send you a photo of your metals, gets shrink wrapped. And if it's gold, they slide it on a shelf. It's, some people have pallets, so it's pallets of silver, but it's all separate. Everyone's gold and silver is separate from everybody else's. And then they do an audit quarterly. And then I go once a year and I do an audit. I do a blind audit. I don't do all the accounts, but I check, a good amount of the accounts.
Samples, right.
It's the best way to do it, in my opinion, because you know that your stuff is separate from everybody else's. And when I go to do the audit, they've already done an audit with their insurance company. So I can see the date and the signatures of the person that did the audit before me. And so I open it up and I match the receipt. There's nothing like that in the investment world where you're actually
And
like
that
getting to see that.
and that's somebody does that. It's the fee when they're purchasing it, and then the insurance, all the audits and everything covered. This is
Correct.
your gold. This is your hard
Correct.
asset.
Yeah,
And
that's right.
if
And it's all insured by Lloyd's of London. And
wow,
it's and we ship too. I mean, we ship to people's homes. That's all insured. We've got a good track record of doing this. We do it a very specific way. It's we ship fast, but we call you a bunch of times. We
sure.
call you 50 times. We text you. There's packages come because we want to make sure you're
No
there.
porch pirates. No.
Yeah, we don't want, people, it's like Amazon. People are just so used to getting packages. Like we want to make sure you actually sign for this package.
Right. And
It's
same for silver, right? You can do
same
the
for
same exact thing for silver. When would you tell somebody, let's say I walk in 57 years old, here's what I'm thinking, here's my retirement plan, here are my assets, etc. Are you going to sit with me and say, hey, CJ, this is what we think, this is the standard operating procedure, this percentage is what we would recommend in hard assets, and we think, this blend of gold and silver? I mean, do you put basically together a hard asset portfolio is where I'm
Yeah, so
going with that?
what we do is we're not financial advisors. So we just sell
Mhm.
the physical. This is what we sell, these items here, physical gold and silver. So we're going to sit down with you. You're going to tell us what you have, what assets. Financial advisors, typically the numbers are anywhere from 2 to 5% of your portfolio. That's what they've
Mhm.
recommended since I've been doing this for 16 years. Some people do more. I've heard numbers 5 to 10%. At the end of the day, it's whatever the client feels comfortable.
Right. Sure.
In terms of gold and silver, what we do is we tell you what our percentages are over the last quarter and the last year and the last 2 to 3 years. So we just say, this is what our clients are buying. They're buying 60% silver, 40% gold, 60% silver, 35% gold, 5% platinum. We just give you all that data
Hmm.
and let you decide. And I think gold is more rare, right? There's only enough gold to fit in 2.5 Olympic-sized swimming pools in the whole world. So silver's more abundant. It's more of an industrial metal. Platinum's more abundant, more of an industrial metal. So you have to decide like what makes more sense. Do you want more of a hyperbolic situation, which I think silver and platinum have that potential because they're more industrial, and we've seen it over the last 7 months. Silver's up $10 in 7 months. So it can go like this fast. Gold
Right.
is more of like, like a stair step, right? It goes steadier because there's less of it and it's in central banks. And so we just lay all that out and we'll give you the charts and we just sit down and have a conversation. And then, the good thing about us is that if you did like, let's just say a lot of people are doing more silver now than gold, and then silver hits, 50, the all-time high, let's say it breaks, and you want to go into gold, you can just swap with us between the metals. We do that for people all the time. So I think it really depends. I have clients that only buy gold because of the reasons that I mentioned, and I have clients today that are really heavy into silver. So it's all different for everybody. I don't think there's a right answer. I mean, I did write a book on silver, so I have some I have some strong feelings about silver. My prediction for silver, the book came out in December, and I predicted by mid next year that we'd hit about $48 an ounce.
Mm-hmm.
And so we're pretty close to 40. So I feel strongly in the short term about silver, but I think long term you should have all three of those metals. Silver,
Right.
platinum, and gold would be the
What's
three metals that I would recommend.
what's the bias in a 60-second or 90-second elevator pitch? Why silver? Why do you love silver over gold right now, or why do you prefer silver over gold right now?
I think if you look at the charts, there's a cup and handle argument for silver that just happened, that's happening, that once it broke through 35 was kind of a resistance level. Once it broke through that cup and handle, and if you go back the last 50 years, you can kind of see where it's kind of breaking through. So I think you have that argument. You have the gold to silver ratio, which is at 88 to 1 right now, or 89 to 1. Typically is 60 to 1. So that would put silver at 50, even if
Right.
gold didn't move up $1. You have 5-year shortage of silver relative to the industrial market. They've
Mm-hmm.
ran short 5 years. This year they're going to have 148 million ounces short. So they have 5 years. Silver is typically a byproduct mining. It's not typically the main metal that they're mining. So they're typically looking for aluminum or tin or something else, and then they find silver. So it's not the main thing they're mining for. And then the industrial uses, since the Hunt brothers in the early 1980s tried to corner the market and it
Corner the
hit
market,
50.
yeah.
If you look at $50 silver in 1983, what does $50 silver equate to in today's dollars? That would be $200.
Okay.
$50 silver in 1983 is actually today's $200. So, and silver's sitting at $39. And then the last reason is, I would say, is that what asset is lower price than its 1983 price in today's world? And there's nothing.
Nothing. There's nothing out there. So the traders, and I always love to put my trading hat on, because that's where I love my long-term investing in everything from gold, silver, but when I put my trader hat, that's a little more exciting, and we strike a nerve with people who will be watching this. But when I put that silver trading hat on, this is just, like I said, volatility is an investor and a trader's best friend. It is
Yeah.
going to be quickly. You mentioned parabolic. I love that you mentioned cup and handle, but you mentioned all of these things, and that is going to be, the relative strength leader here if you were looking at it from today being the point go.
Yeah. And this is just a little fun point that I love, is that the bullion banks, the institutional funds, have been leveraging silver short for the past few months, and they're losing like hundreds of millions of dollars in this investment because they're leveraged the wrong way. So I love that too.
It's
I
a good
love
old
that they're
fashioned short cover. Yeah.
I love that too. And so that makes me happy to see them suffer a little bit, and
Well,
the little guy win out. And I think silver is always, in my opinion, it's kind of been like, the little engine that could. And so I still think it's got that potential.
Well, it certainly picked up a trader's edge, if you will, probably 2 or 3 years ago. I think everybody
Absolutely.
started to notice that, hey, this is the thing that's moving much faster than gold, and it wasn't playing catch up. I mean, we had the benefit of coming out of the pandemic, and all of a sudden you saw industrial demand go up around the world.
Absolutely.
So it was a great tailwind. But I think the story was you also saw the investors, as Main Street investors, wake up to the fact that silver was undervalued,
Yeah.
and this was going to be something that took it, not obviously step for step and all the way up to price for gold, but on a relative strength basis, it would outpace it. Let me take that thought for just a second, and we got to shut it down in just a couple of minutes. We don't want to go too long, but Warren Buffett comes to mind when I bring this up, and the trends that I've seen, whether you look at ETFs, whether you look at, and the same can be said, actually, Bitcoin ETFs are way early, but they are constantly at the top in terms of inflows. Every month, it seems like you've got 3 of the different Bitcoin ETFs that are right up there. ARK Investments included. They're a
Mhm.
ETF fund, and they've done a good job of keeping it somewhat reasonable in terms of the managed fees and all of that. But the old saying that Warren Buffett was famous for, and I think a lot of people saying it, and you've already asked me, hey, have you ever hit the bottom or the top? I always say luck prefers a prepared investor. That's it. If you hit
Right.
the top or the bottom, that you were lucky,
Yeah.
regardless. But it feels like everybody has turned into a gold bull, not necessarily a silver bull.
Mm-hmm.
Bitcoin, I think you're too early in that to have a full sentiment cycle. But we all know that Warren Buffett said, hey, you buy when everybody's most greedy and you sell when everybody's fearful, when there's blood running in the streets. And I already mentioned the central banks. Are we close to, is it possible to have a top like that, like a euphoric stage for gold, where you have a lack of buyers at some point?
I think it's what buyers are we talking about? That's what it really comes down to. Like
That's
the retail
a good question,
buyers,
actually.
I remember talking to somebody in June of last year, and I was saying that the U.S. retail market was slow, that they took a while and they were late to the game. But when Trump got elected, that all changed.
Yep.
They were heavy in getting into derivative gold, heavy. As soon as the election happened, they bought derivative gold. So they knew quickly that his measures are growth measures and inflation measures, and that it would push the price. So I think you can always have the retail market lose some interest or some steam in buying of gold. I don't think we're going to see a 2011 pullback, because every time I see it drop, could it go below 3,000? Sure. But I think that gold has created some new floors at this point, and the demand, what I tend to see is if it drops 100, 150 bucks, there's pretty renewed buying into it. So I think that you could see it go sideways or maybe flatten out for a while, because I mean, we're running a pretty massive run already.
Right.
But I think long term, it always comes back into fashion because of just the overall debt of the world. Things that have a limited supply that people need will always come back into the fold. And so if we ever trend where debt goes down, maybe gold would do poorly in that scenario. But I don't see any evidence that is ever going to happen again.
Last question on that topic there. If the reserve currency issue were to play itself out, and indeed we lost that status, let's say it's a year, 2 years, I don't know when it is, but let's say it's tomorrow. Does that press on the accelerator for gold? I mean, do gold, silver, platinum, do they just go through the roof and absolute parabolic at that point?
$30,000, $40,000 gold at that point.
All right. So the person who is sitting around worrying about the currency reserve situation or the reserve currency situation should absolutely be buying hard asset gold, hard asset silver, platinum, all of that right now.
And I would end with this. What happened to the audit of Fort Knox? Never happened.
You know, I didn't want to go down a conspiracy theory thing.
But when you told me that they said they were going to do it, and then they didn't do it.
When you told me the state of Texas was allowing you to put gold on deposit with them, I'm sitting there going, well, hold on a minute. Is this an effort to, bring some of that supply back and get bars back where they're supposed to be ultimately? Yeah. You're exactly right. I mean, Marco Rubio went, I think he went, Marco Rubio went and took a look. He didn't do an inventory, but kind of.
Bassett just said it's there. Don't worry. Sure. Great. So, don't worry. We haven't done an audit in 50 years. Yeah,
so
sure. We trust. Yep. You've been telling us not to trust the government for all this time, but now we're going to trust.
No verify. We're just going to trust, no verify.
Sure.
You know what? I just found a weekend gig for you, Collin. Just like you're a guy with the garage sales, maybe you can get a little side work, a little side hustle, as the kids say, and go and start the inventory of Fort Knox. Right?
I do it with my depository.
That's exactly right. There's my point where I wanted to bring it back.
I'm a paper pencil guy. It might take me a while, but I'll get there. You know what I mean? Just bring a few
green visor
with a little calculator and a yellow pad.
I'd pay money to see that, and I'm sure you could put that up on your website and grab people's attention right away, and they'd say, "Okay, this is my guy." All right.
Yeah. When this whole thing went down, I said I'd pay $1 million to be in the audit, and
it'd be fun to watch.
I didn't hear back.
So the book, I'm going to ask you in closing. First of all, where do I get a copy of the book? Because I'd love to read.
You can call us. We have codes. Okay. So you go to noblegoldinvestments.com, call us. We'll give you a code for the book.
All right.
It is on Amazon too, but call us and we'll get you a code to get a discount on the book. So
Okay,
that's probably
cool.
the best way.
Because that looks like that's definitely something I'd be curious in. When I see the title there, I think about oil and how oil is kind of stuck in that weird spot that just doesn't seem like it's working right now. So if it's
Yep.
the new oil, I'm in. I definitely want to take a read. You got any questions for me? I always like to ask that when we're closing up here. What have I left
Yeah,
open for you?
I think I guess my question to you would be, what do you think is going to happen, over the next few months? Like, where do you think? Do you think that the markets are going to stay at this near all-time high? Do you think we're going to have a correction? What are your thoughts?
I think this is the biggest wall of worry that we've seen in history. When you look at stocks, when you look at anything right now, bonds, obviously not the case, dollar, not the case. When you look at equities and soft equities, I guess we would call them right now, I think the market's been climbing a wall of worry for the last year, let's call it. And I that's one of my things that I've done deep dives on is quantifying investor sentiment down to the stock level. And a wall of worry is always good because there's pessimism. And if there's pessimism, that means there's money on the sidelines waiting, for things to go wrong. And when it doesn't, that's when, you get that last push. So 4 stages of a market, I don't care what market it is, 4 sentiment stages, ends in euphoria, and always at the bottom comes when you've got despair, when nobody wants to own anything.
Mm.
I think we're well beyond acceptance, which is the one before euphoria, and I think at some point we're going to hit some stumbling points. It's going to be an interesting August and September because those are bad months for the market, period. Historically, those are bad months. October, we all know that you back up the truck and you buy it and things go through the roof, and it's just muscle memory for investors at this point. So to your end, or your point, we're in a sketchy point. I mean, there are a lot of potholes we could hit or landmines. You got earnings right now, tariffs. I do think firing Jerome Powell, which earlier today, what was his name with Pimke, Alarian came out and said Jerome Powell should step aside.
Mm-hmm.
Ooh, man, if Wall Street gets behind this, I think we've got troubles.
Yeah.
So I think we got a lot of things, but I think ultimately when you look at it kind of like you look at gold 5 years from now, currency reserve, all of this stuff behind us, we'll long term, it's looking up. You want to be a buyer. It's just maybe, it's going to be a rough year or two, I think.
Yeah.
Which is a good case for gold and silver and platinum.
Yeah.
And I think Bitcoin now. I am starting to get into that sense of, all right, Bitcoin is more than just a speculative asset. So thanks for your time.
Thank you so much.
Code, because I do want the book. I want to take a look at that book.
Okay, cool. Sounds
all right,
good.
buddy.
Thanks,
Have a great night. Thanks again,
Thanks,
Collin.
Chris. All right,
Yep,
bye-bye.
bye.
Bye.